Stocks are celebrating right now. AI names are still getting attention. Chip stocks are still pulling money. Nasdaq is acting like the risk-on trade is alive again. But there is one problem that most retail traders are probably ignoring. Bitcoin is not celebrating the same way. And that matters because Bitcoin is not just a crypto chart. In this market, Bitcoin often acts like a liquidity detector. When money is loose, confidence is high, and traders believe the Fed is moving toward easier policy, Bitcoin usually reacts fast. But when stocks are rising while Bitcoin stays heavy, that is not always strength. Sometimes that is a warning that the rally is being carried by one narrow part of the market. The emotional trap is simple. Investors see AI stocks moving. They see green candles. They see headlines saying growth is back, and they feel late. They feel like the train is leaving without them. That is exactly when the market becomes dangerous, because FOMO makes people buy the surface story instead of checking the liquidity underneath it. The Fed just gave the market a very different message. Rates were held steady, but the tone changed. The old comfort that rate cuts were coming soon is no longer the same. The market is now dealing with a Fed that is less willing to guide investors gently and more willing to let the data, inflation, oil, the dollar, and bond yields do the talking. That is why this moment is so important. Stocks can move higher because AI still has momentum. Nvidia and other chip names can still attract attention. Micron earnings next week can still become another AI test. But Bitcoin, gold, and the dollar are telling a more uncomfortable story. Liquidity is not clean yet. This does not mean stocks must crash tomorrow. It does not mean Bitcoin must collapse immediately. The real message is more subtle. If the market is truly entering a healthy risk-on phase, Bitcoin should start confirming it. Bitcoin should stop acting heavy. Gold should stabilize. The dollar and yields should stop pressuring everything. But if stocks keep rising while Bitcoin stays trapped, that is the danger zone. Because that means retail traders may be chasing the loudest green candle while the deeper macro signals are still warning that money is not flowing freely across the whole market. So the question for the next session is not just, are stocks going up? The real question is Bitcoin confirming the rally or exposing it? Because if Bitcoin refuses to follow, this may not be a clean breakout. It may be a market party with a liquidity warning hiding in plain sight.